Financially raw, real, authentic wisdom with Lawrence Oberholzer from Retire Rich and Happy.
Good morning, everyone, and welcome to another show, another Retire Rich and Happy Financially Raw on Thursday morning. In my studio this morning, we've got Japie Venter, long-standing guest. A show that was going to be one show turned into, I think we're in episode 6 or something of this. I've lost count. But yeah, welcome, Japie. Thank you for joining me this morning. It's good to have you here.
Thanks, Lawrence, and thanks for listeners for showing such interest and enjoying the talks.
Yeah, and engaging. Yes, I think we've had more engagement on this topic than we've ever had on any of the other topics. So it's really something, and we tend to have this idea that talking about insurance is such a boring concept. We always joked about you getting the boring speech because you had to talk about the insurance. But there's so much interest because people don't always understand exactly what these things can do for them and to use it optimally. So we're paying for things that we don't really understand.
I think it's a sign of the times, Lawrence. You know, with people having more access to information, people start thinking more and questioning more, which is a great thing. People aren't going through life anymore with blinders on, just accepting everything.
Yes.
So guys, ask questions.
Yeah. Engage
with your financial advisor, engage with us,
yeah,
and let us help you to structure these things correctly.
Yeah, and on that note, guys, Ruan says, Môre, Lawrence and Japie. Frikkie says, hi guys, hi everyone. It's good to have all of you on the show. And as per normal, if you have any questions, you are welcome to give us a shout out on the site. Just press the shout out button, send us a message, and we will answer any questions you might have. Or if you just want to say hi, you are welcome to tell us that you are listening. You can follow us on Facebook, Retire Happy. Follow us on Instagram, I Retire Happy, and then also go search Financially Raw on YouTube. You can find all of our shows on YouTube. There's the long show and there's the shorter snippets as well if you don't want to sit and listen to a 40-minute show. Frikkie's already sent a question through, so we'll get to that question. Let's start with some music, and then when we come back, where are we today with the short term? What are we going to talk about today?
Lawrence, we ended the show last week with a quick discussion about excesses. There's a couple of other things I would like to mention about excesses, and then we can move over to those additional covers. Those things people think they need but don't really need, or think they don't need but actually need.
Yes, yeah.
And then depending on how much time we have left, there's some general things, speaking about liability, speaking about SASRA, and speaking about the claims experience in general.
Okay, specifically looking at what happened in our country a couple of months ago with the riots and everything. A lot of people suddenly realized that SASRA is actually a thing, and
Correct.
then suddenly they didn't understand what the hell it is. So
yes.
Let's talk a little bit about that. Okay, so let's go and do some music, and I've got a random collection of music today. So the first one we're going to do is Cats in a Cradle, but the Ugly Kid Joe version, not the normal version. So enjoy. Okay, so before we left, Frikkie sent through a question. So before we start on the others, this he says it emanates from previous shows. So let's go back a little bit, answer the question, and then we can move forward from there. So Frikkie says, my garage and my neighbor's garage is linked to each other. Mine is a metal roof and his a thatch roof. But this is also linked to his house and mine is not. What happens in the case of a fire and my garage also catches fire and burns to the ground? So just for the listeners to understand as well, is when you have a thatched roof, it does increase your risk. So therefore you probably will pay more if you have a thatched roof than you'll have a normal tile roof or a metal roof. So you have to declare that if it's your house that has a thatched roof, but this is now a different house that has a thatched roof but linked to your property. So it's a very interesting one. So Japie, how would the insurance companies look at that?
Lawrence, yes, it's something that you need to be cognizant of, what's happening around you and around your property, because at the end of the day you are responsible for what happens on your property, and you have a duty of care to disclose certain things to an insurance company. all that said and done, like you rightly pointed out, the big problem with thatch roofs is a fire risk. This emanates from the history of insurance, where fire was kind of the first thing insurance companies insured when it gets to towns. But in this specific situation, the duty on you is to declare what's happening on your property. The insurance company will ask certain questions like, are you staying next to an open veld? Are you staying in a complex, a standalone house? All of those types of things.
Yes.
If your neighbor's house catches fire and that then spreads to your house, potentially your insurance company would repair any damage to your property, and they could have a liability claim against your neighbor's house.
Like a third party claim again.
Correct.
Okay.
Correct. Because it's what they call duty of care towards your neighbors, and also another interesting subject is proximate cause. What was the original cause of the damage?
Yes.
So if the damage originated because of a third party, in this case your neighbor, his house burned down, then your insurance company would probably claim back from his insurance company any damages that you incurred.
And it could work vice versa. Correct. So if you were welding your metal roof and some of the sparks go onto your neighbor's thatch roof and puts it or starts a fire there, it could be vice versa. His insurance would probably fix his damage and then claim from your insurance because it started at your place.
So to sum up an answer for you, Frikkie, you will not be responsible for something that occurs on your neighbor's premises. Make certain that your insurance is correctly structured concerning your building, and they have all the relevant information. When it gets to a claim, if it's a covered event, you should have no problem.
Would you suggest that the client actually declares that and just states when he takes out the policy, listen, my house is metal roof, but I do have this situation, and so that they just have it on record?
We've mentioned numerous times, rather give too much information. Rather declare it and leave it up to the insurance company to make a decision.
Yeah.
Than not declare something in the hopes of, maybe I can save some premium, and then having trouble with the claim.
Because they wouldn't necessarily do anything about it, because it happens it's such a exception to the rule that most insurance companies, I think, will just ignore it in any case, because it's not something that's every third house has the same situation.
Correct. So there's no real precedent.
Yes. Okay. All right. So I hope that answers your question, Frikkie. So guys, if you have any more questions, and it doesn't have to be just on car insurance or excesses, it can be some of the previous shows as well. You are welcome to ask us on the website. Just press the shout out button. Again, you can follow us on Facebook. Facebook is Retire Happy. Instagram is I Retire Happy. And then YouTube, you can go to Financially Raw, or just search for Retire Happy as well on YouTube. Okay, so let's start talking about today. Firstly, excesses. There's a couple of things that you still want to discuss around excesses on your car.
Correct. Lawrence, we had a quick discussion last week concerning what is an excess and why certain excesses apply. But there's a little subsection that people need to know about, and that is additional excesses or a tiered excess structure. We pointed out that in most cases you have either a flat excess, so if something happens to your car or to your house, building or risk section, you will have a excess of X rand. It could also be structured in a percentage of the claim or percentage of the insured amount, with a minimum of a certain amount in rand terms. But especially when it gets to vehicle, there are excess structures which kind of compound. So you will have your standard excess, but if somebody younger than a certain age, usually 25, drives your vehicle and is involved in an accident, then there's an additional excess that needs to be paid.
Okay.
Most insurance companies also have certain time limits. So they will say, if you're in an accident after 10 in the evening, there's an additional excess. If you're in an accident after 10 in the evening and it's a single vehicle accident, meaning there's no other parties involved, there will be an additional excess. Now, a lot of people ask me, but why? Guys, when driving after 10 in the evening, in usual, forget about lockdown and all of these things, 9 out of 10 times people are coming from a bride, coming from a bar, but the insurance company can't always prove it. So to counteract people being dishonest, they penalize everybody with an additional excess structure.
Yeah.
And
Because it's a higher risk time period.
correct. And especially if it's a single vehicle accident. You know how many claims occur because a dog ran in front of you.
Or the tree. The tree just came out of nowhere.
And because of that, and because of it, it's so very difficult for an insurance company to prove that somebody was under the influence or somebody fell asleep behind the wheel, there is an additional excess.
Yes. Yeah.
Again, know about these things.
Yeah.
We're not saying do not drive at certain times. We're not saying do not let other people drive your car. But be aware of the potential risk and the potential excess it could incur should these things happen.
Yes. Yeah, and the thing is, going back to why they do that kind of thing is, if they don't put on additional excesses for those high risk times or single vehicle accidents or things like that, then the premiums would have to increase to counteract the risk, which means that that's more of a penalty for everyone than just saying, well, we'll charge an additional excess, because you might not drive after 10 in the evening, so you'll never have that situation where somebody who goes out and parties with his friends until 2 every morning, he will have a higher risk, therefore he'll pay an additional excess. So it's not to penalize you, it's actually to benefit the guys who don't do these high risk activities.
That's very true.
Okay, so I don't know if you're going to get to it, but excess waivers. There's always, we're going to talk about excess waivers. I like excess waivers, but yeah, there's certain things about it.
Yeah, this discussion of excesses leads us very, very nicely into our add-on discussion. Add-on cover is additional type of cover you can take out through an insurance company. Of course, this means you pay an additional premium because anytime you add or subtract something to your insurance policy, it would affect the premium. So let's discuss excesses and the add-on portion concerning excesses. Over and above your standard excess and in the tiered excess structure as we discussed, you can apply for an additional voluntary excess.
Okay.
What this would mean is you go to the insurance company and say, in the event that I have a claim, I am prepared to pay a higher excess. This would also then mean that smaller damage to your vehicle is more subject to you having to pay for the damage than the insurance company.
Yes.
Because any claim that happens which is less than the excess, they are not going to entertain.
Yeah.
So in having a voluntary excess, that means you pay a voluntary higher excess which reduces your premium. Now, why on earth would anybody have a voluntary additional excess? It's about the premium. So if you're in a situation where you know, I've got an emergency account sitting in my bank or wherever you keep your emergency account, and I am willing to take the risk that should something happen, should I be involved in a claim, I can tap into some of that money.
Yes.
Then save premium on a monthly basis.
But and use that to fund your reserve account like we teach with the coaching. Yeah.
Correct. So use that premium you're saving. Don't go and buy chocolates.
Yeah, exactly.
And unless you're buying some collector's chocolates, which is an investment, but that's a subject for another day.
Yeah.
So that's the main reason you'll have an additional voluntary excess. On the other side of the spectrum, there's what you mentioned now, a excess waiver or waiver of excess. What this means is you go to the insurance company and you say, I am willing to pay more on a monthly basis to not have an excess or to have a reduced excess.
Yes.
Again, why would somebody do this? Guys, if you're in a situation where you know, listen, if something happens, I'm not going to be able to pay an additional excess or any type of excess, then pay a bit more on a monthly basis and you will not have an excess. But understand the limitations of waiver of excess as well. Like we mentioned earlier, in a tiered type of structure, 9 out of 10 times your waiver of excess applies to the standard or the base excess.
Yes.
It does not apply to any additional excesses payable. So again, if somebody under 25 drives your vehicle, or it's a single vehicle accident, or any of those types of things, those excesses would still apply.
Yes. Okay, then just quickly on the voluntary excess. If you have a voluntary excess, so instead of saying 5,000 Rand flat excess, you say I'm willing to do 20,000 excess. would the additional excesses still apply on top of that, or would that incorporate all excesses
No.
up to 20,000?
It would still apply
So you-
over and above.
Okay, so you might have a 20,000 Rand voluntary excess, and then have a single vehicle accident 2 o'clock in the morning, and you'll still have an additional 5,000 or 10,000 Rand on top of that.
Correct.
So it could happen. Okay.
Correct.
All right. So yeah, that's important to understand. The other thing is, in your opinion, if let's say you have a voluntary excess of 20,000 Rand, and the client gets a bumper bashing, and he knows it's only going to be 5,000 Rand to fix, would you still tell your insurance company that this happened, or would you just go and fix it, or would you still put in a claim in the sense that you inform them of it for in case there's a third party claim, or would you just fix it and not say it because you don't want it to affect your no claim bonus or your cashback bonus?
Usually, when you only notify an insurance company about a claim, it does not affect any no-claim bonuses.
Because it's not costing them money.
Because they're not actually paying out a claim. It could affect your cashback. That depends on the companies. And that's one of the reasons we don't like the whole idea about cashbacks. But, to answer your question, anytime there's a potential for a claim, it's very, very important to inform your insurance company that this event did occur. You are not going to submit a claim. You're only informing them of what happened.
Yes.
Because of two main reasons. Number one, like you pointed out, to make certain that if there is a third party claim, that can still be entertained. Because there's a term we call prescription. So you have a small little bumper bashing, you decide to go and fix your car yourself. After 30 days, if you have not submitted or notified the insurance company of a claim,
or a potential claim,
then that claim expires. It prescribes. So you can no longer claim for it. Meaning that if at day 31, the third party, the guy you were involved with bumper bashing with, now comes to you and says, oh, but not only my bumper, but the rear suspension and my neck and my groceries and all of these things were damaged as well, then you can no longer submit that to the insurance company.
Okay. Yeah, so it's important to make sure. So if you reversed into a pole, probably you could just fix it, still notify, but you could just fix it and it shouldn't be an issue. But if you had a bumper bashing or there's any third party involved, even if you feel it wasn't my fault, still go and just inform the insurance company for in case this happens.
It's not my fault is a very, very important thing to remember, especially when it gets to vehicle claims. Guys, never ever admit liability. I know it sounds like being crass and telling other people. I'm not saying run around and get into an argument with people about whose fault it is. Rather just mention, let's have the insurance companies have a look at this and determine what exactly happened.
Yeah.
Because as soon as you admit liability, you are basically committing your insurance company to a claim, and that's in breach of the policy contract.
Because you aren't allowed to act on behalf of your insurance company.
Correct.
Okay. All right, so let's take a short music break. When I come back, I want to talk a little bit about the process. You're in an accident. What do you do? Do you allow these guys to just, whoever pitches up, any of the vultures who just pitch up, do everybody just tow your vehicle, or shouldn't you? Who do you call? All of those kind of things. And then the myth that the assessor will come and check your tire tread to get out of a claim because the car caught fire now because your tires were your tire tread was down, now they want to not pay the claim, that kind of thing. So I want to chat a little bit about that, and then if you have any questions, you're welcome to send it through to us, and then we will answer the questions online. So guys, our next song, one of my all-time favorite bands, is Rammstein. I haven't played a lot of Rammstein on the show, and this is Engel, the English version of Engel. So we won't do the German, we'll just do English. Welcome back everyone, and that was Engel, the English version from Rammstein, one of my favorite bands, especially when I go to gym. So we've got almost said unanimous, anonymous, Japie #1 fan. of Japie says, "Woohoo, Japie, jy is die beste." So whoever it is, thank you. Japie is going all red. So Japie, you've got a fan.
Thanks very much to anonymous listener.
Yeah. All right. So we said that we're going to talk a little bit about claims, what happens if you're in an accident, what you should do, shouldn't do. So yeah, any tips, any ideas, or do you first want to finish with the other products you said?
Lawrence, if we could just quickly finish up with add-on cover, because I feel otherwise we're going to drift completely off topic. There's just two other add-on things which I feel people should understand. Number one is shortfall cover.
Yes.
Remember when we spoke about how the value of your vehicle is determined and which value it is insured for? So shortfall cover covers the difference between the insured amount and the amount that's still outstanding at the bank. So when you're buying a new vehicle, the value of the vehicle is 200,000, but you owe the bank 300,000 rand because of all the fees and interest and all of those types of things. The way vehicle financing is calculated is that the interest is added up front. So from the time that finance contract is signed, you owe the bank
the interest
already. In the event of a total loss, so the vehicle being stolen, the vehicle being written off, then you owe the bank all the outstanding money on that contract. When the insurance company then pays out the retail value of the vehicle, let's call it 200,000 rand, that means you still have a shortfall of 100,000 rand. Now you've got a couple of options. You can go and refinance that amount, you can make an arrangement with the bank to pay it off, but that's going to incur interest, which in the longer term is really, really going to hurt you. So we always advise people, when buying a new vehicle, rather look at shortfall cover. Because when the vehicle is then a total loss, the insurance company would pay out the retail value of the vehicle. This is again assuming your vehicle is insured for retail value, plus the difference to what you owe the bank. Remember, this money is not paid to you, because like we discussed previously, the bank is technically the owner, so they will get paid. All debt has been settled. You go and you apply for finance for a new vehicle, you buy another vehicle, which means you are now still back in the position you were before the loss occurred. Speaking of shortfall cover, remember to monitor your vehicle value and compare that to what's outstanding at the bank. We get so many people who finance a vehicle over 5 or 6 years and keep on paying shortfall cover even when the vehicle value exceeds the amount still owing to the bank.
Then it's pointless.
It's not going to pay out. It's not cover you buy for every eventuality. It's very specific cover. So monitor the value of your vehicle, compare that to the amount that's still outstanding at the bank, and then decide whether you want to cancel your shortfall cover or keep it a little longer. A good rule of thumb is usually about halfway through your finance term, you'll be in a situation of break even, where the value of your vehicle equals the amount still outstanding to the bank.
So what you can do is look at the retail value on your policy schedule, what it's insured for through the insurance, and then get a settlement quote from your bank, because it's the settlement amount, not the total outstanding balance on your statement that they send you. It's the settlement amount, and then see where that is. I wouldn't, if the one is 200,000 and the other one is exactly 200,000, I would wait another 2 or 3 months just to make sure. And once it's about 10 or so thousand difference, then I will cancel the shortfall cover. But like you said, so many people, I did that myself, because you forget, the thing goes off your bank account and you just forget about it, and then by the time you realize that you've been paying for shortfall cover that you couldn't claim on for 6 months. And guys, the insurance company is not going to come to you and say, hey, we think that you are now paying for something that you don't need. They are just going to keep deducting the premium. So it's your responsibility to look at that and make sure that you're not unnecessarily paying for things. Okay.
The last one is car hire. Now, car hire can sometimes be a tricky situation, because car hire is divided into different levels. So you can get a small little runabout as a hired car, you can get a bigger car, you can get a bakkie, you can get a truck, whatever your needs are at that point in time. Remember, the bigger the car is you request with car hire, the higher the premium is going to be for car hire. So how does car hire work? car hire is usually for a maximum period of 30 days in the event of an insured event.
Okay.
So the vehicle is damaged in an accident, needs to go in for repairs. They will then provide you with a hired vehicle. The vehicle is a total loss. They will provide you with a hired vehicle for the maximum time period. Usually it's a small little runabout. So make certain when you have car hire on your policy what type of vehicle it is and would it suit your needs. Now we get a lot of people who insure 3-4 cars on their policy and then add car hire to each and every one of them. And my question is always, why? It's you and your wife and your son and your daughter. Guys, anytime you can save premium but still understand the risk, minimize the potential loss you will suffer, look at saving the premium. In those instances, you can always make use of your wife's car, your son's car, your daughter's car, for the period of the vehicle being in for repairs or the claim being handled in the event of a total loss. If you do feel this is a necessity, all of these people are in a situation where they need their cars 24/7, then by all means take car hire on all of them. Also remember that at some insurance companies, car hire is not physically attached to the vehicle. Okay. So it's an additional add-on.
Yeah.
When removing the vehicle from your policy because it was sold, check the car hire. Make certain they remove the car hire. Make certain they remove the additional excesses or voluntary excesses. Make certain they remove the shortfall cover. So you don't keep paying for those types of things.
Okay.
So, Lawrence,
just quickly, there's a question. So you do have a claim. Your car is worth more than what is outstanding at the bank. So will the insurance company first pay the bank? So let's say you owe 200,000, the car's worth 250,000. Will they pay the 250 to the bank and the bank will have to refund you 50? Or will the insurance company just split it, pay 200 to the bank and 50 to you?
That's how it should work. So the insurance company will ask for a settlement amount from the bank. They will pay the settlement amount and the rest will then be paid out to you minus your excess.
Okay, awesome. So also they won't pay you the 250 and you have to go settle the bank. So don't try that one. They won't do that.
They will not.
Okay. All right. Yes.
So that covers the additional covers. There are a lot of other small little things, guys, but discuss this with your financial advisor when it's needed. Remember, in our shows, it's impossible to cover every potential eventuality. Otherwise, we're going to be here for another 10 weeks. But if you have questions, contact your financial advisor, contact us, and we can guide you through all of these types of things.
Yeah, talking about contacting, where can people get hold of you if they have a question or they want to chat to you or get you to help them with their stuff?
2 ways of contacting me. Either email yarpi@retirehappy.co.za or else they can WhatsApp me on 081 383 7256.
Okay, so if you want to chat to Yarpi, Yarpi's #1 fan, there you have his contact details. You can send him a WhatsApp or an email. Okay, so let's talk a little bit about claims. All the myths around insurance companies trying to weasel themselves out of claims, and then what you should do if you're in an accident. Because I think that's one of the big things. People get in an accident, the adrenaline levels are through the roof, they shaky, they don't know, and everybody's just talking to them. The police pitches up, the vulture comes, everybody's just there. What should you do? What do you need to look out for?
What I usually advise my clients is to make themselves a little checklist, things to do in case of an accident. So keep that in your car, keep that in your wallet, keep it somewhere where it's easily accessible. So here's the main steps to take. Number 1, make certain that you are safe. Contact the ambulance, contact the police. Those things need to happen. Contact the ambulance if people are hurt or if you suspect that somebody could potentially be hurt. It's better to rather have people on the scene to assist than just trying to say, oh no, I'm fine, and develop problems at a later stage. So number 1, contact the police, contact the ambulances. Make certain that you are safe. Once that is done, you can start exchanging information. Depending on the severity of the accident, if it's small or bumper bashing, the information you'll need is the third party's full names, ID number. If you can, take a photo of their driver's license and registration disc, maybe their license plate as well, and the current damage. All of those things serves as a record to what happened in the accident.
Yeah, it would be a good idea to, if you're capable, to take some pictures of where the cars are standing, their surroundings, etc., because we live in an age where technology is so easily accessible that you could do that. Remember when we started taking out insurance, you had to, from memory, draw a little picture of the dog running across the road and everything. Now you can just take pictures.
Yes, definitely. It just makes your life easier. It makes explanation easier. Like you pointed out, when involved in an accident, adrenaline levels usually shoot through the roof, and now 2 or 3 days later you need to explain what happened, and details get a little fuzzy. So document as much as you can. Also, if the third party is insured, get the insurance information. All of that information you also give to the third party. All of this, guys, is taken into account that nobody's been seriously hurt.
Yes.
In the event of being seriously hurt, all of these things are kind of out the window. Get yourself to safety, get in the ambulance, get the help you need, and deal with these things later.
Yeah.
Always, your own safety is paramount. So after exchanging information, you can now contact your insurance company. You asked earlier, should I just have anybody tow my car? This Oak is here. He says he's accredited. Just let him tow the car.
Yeah. Because all of them are accredited to everyone when they pitched.
Very, very big mistake. Also, do not have the tow truck driver phone up a insurance company on their cell phone and hand the phone to you. Guys, a lot of times these, we call them vultures. Just phone up their little call center or a friend, and this person pretends that they are the insurance company and gives permission. You being in a state of shock, you say, yes, that's
just
fine.
take it,
And that's when it happens that you all of a sudden find your car is not where somebody told you. Now you have to pay a lot of storage fees to get your car back. They took it somewhere to some repairer or some mechanic to help you out, and now that person is charging you an arm and a leg. And those, very seldom are those people accredited by your insurance company.
Yeah, and now the insurance company doesn't want to pay for the towing costs, the storage fees. It's a nightmare.
Correct. Again, when using a tow truck that's accredited by your insurance company, they have a set fee. So they agreed with these guys that, listen, we'll pay you X amount for towing. The tow truck driver or the tow truck company is happy because they know that most of the vehicle accidents in that area through that insurance company will come to them. Guys not accredited, these vultures, they just charge whatever they feel like. So if possible, phone your insurance company yourself on the number provided. You usually get a little sticker that says, in the event of an accident, phone this number. They would also potentially have a little brochure you can keep in your car. Also, add this to your little checklist that you keep with you.
And when you change insurance companies, make sure that you change that number. Yeah.
Correct. So when speaking to your insurance company on if it's after hours, the emergency number, they will be able to tell you, we'll send somebody, or, oh, this Oak is here, this is his name, this is his company, are they accredited? And they will then give you the go-ahead. Once that is done, the vehicle will then be towed, or if it's still drivable, you can drive it home and take it into the mechanic or panel beater at a later stage. In the event that the vehicle needs to be towed, again, the insurance company has an agreement with these companies for a certain amount of storage fees. It's usually easier for the assessor to go out and see the vehicle. So those are the main steps to take in the event of an accident. Exchange information, phone up your insurance company personally, make certain that you get the necessary authorization before anybody touches your car.
Yes.
Take a couple of pictures, gather as much information as possible, again taking your own safety into account.
Okay, all right. And then the myths they're going to come there and look at your tire tread, and if that's not 100% perfect, they're going to repudiate the claim, even though it's got nothing to do with your tires. So is that true? What is the case?
Lawrence, yes and no. Some insurance companies will always look at a way not to pay claims, while other insurance companies look at the circumstances. We mentioned the term called proximate cause earlier. So what was the original cause of the insured event? You are parked at a shopping center. Somebody drives out of the shopping center and hits your vehicle. Your vehicle's license disc expired. Was the proximate cause of the accident the fact that the license expired, or somebody else drove into you?
Yes.
Now, it could be a massive argument that, but the license expired, so you weren't supposed to be at the shopping center. It gets very, very technical. But that's got nothing to do with the accident. The same thing applies to tire thread. Your vehicle gets stolen and recovered. The fact that you had bald tires on did not mean the vehicle would not have been stolen had it new tires on.
Yes.
So it's all about this proximate cause. What is the original cause of the insured event? If the insured event is influenced by outside factors, you not having a driver's license, driving under the influence, not obeying certain terms and conditions in the policy wording, then definitely an insurance company could repudiate your claim. But if the proximate cause has got nothing to do with the loss, the insurance company should pay your claim.
Okay. Yeah, so, and I think that's something that we can chat about after our music break, is what is your recourse if the insurance company repudiates your claim? What do you do? Who do you speak to? And again, the benefit of having an advisor or having a broker to fight on your behalf. So let's have a chat about that when we come back. We're going to have a short music break, and we're going to listen to Alice Cooper, his most well-known song, Poison. So the last little bit of the show, we're going to talk about what's your recourse if they do repudiate your claim. But we've got a question here from the audience. Rian asks, when my car goes in for repairs at the panel beater, and they want to put on second-hand parts, or not really second-hand, he says second-hand, but not really second-hand, non-genuine parts, can I insist on genuine parts?
Lawrence, that's also always an interesting question. And we have to divide it into two parts. Number one,
excuse the pun.
Unintended. First off, how old is the vehicle?
Okay.
And is it still under warranty? If you have bought a brand new vehicle and now you're involved in an accident, and there are certain parts that need to be replaced, some of those parts that need to be replaced can affect the warranty on your vehicle. In the event that the insurance company or the panel beater then replaces those parts with non-genuine parts, you will no longer have a warranty on your vehicle. That puts you in a different position than you were in before the claim.
So that would be more functional parts, like engine parts, those kind of things, not necessarily cosmetic parts like a bumper.
Correct, totally correct. So anything that would affect the warranty on the vehicle would be engine parts, suspension parts, sometimes headlights, windscreens, all of those things that are attached to the primary safety of the driver.
Okay.
Or the drivability or the use of the vehicle. But using a different paint, not going to affect the warranty. Replacing it with a imported bumper, not going to affect your warranty at all. So in the event of a new vehicle, anything that will affect your warranty, that needs to be replaced with like-for-like new parts. When we're talking about older vehicles, now older vehicles usually older than 5 years, most warranties are then expired already. The insurance company and the assessor will most likely use either second-hand parts or non-genuine parts. A lot of people complain about this, but again, it's a function of cost. If an insurance company replaces everything with brand spanking new genuine parts, costs run through the roof.
Which means premiums will go up.
If that happens, the insurance premiums will need to go up. And then you're not going to be happy about paying it. And guys, let's be fair. How many times have you gone to an authorized dealer to replace brake pads on your vehicle, only to realize it's an astronomical amount, where you can get exactly the same things, name brand, at a
fraction of the price.
A fraction of the price from one of the
I mean,
franchises.
I just had it with my Bakkie with the wiper blades, and the dealer actually told me don't buy it from us, because from us it's like 650 odd rand, where you can go across the road to Midas and buy it for $160. So, and that's the dealer telling me to do that.
Correct. So, to sum it all up, can you insist? No, unfortunately you cannot. That said, you can insist that the parts are replaced with like-for-like parts, and that those non-genuine parts would not affect the safety or the functionality of the vehicle.
Yeah, so that you're in the same position you were in. You had a warranty, you still want a warranty after the repairs are done.
Totally correct. And that's also where the assessor comes in. Guys, insurance companies are not out to screw you. They are there to do two things. Number one, make certain that you have a valid claim. Number two, make certain that the insurance company can stay in business and be profitable. Because if the insurance company cannot do that, then they have to increase premiums.
Exactly. Okay, and then now they do repudiate your claim. What do you do now?
First and foremost, that's where the value of a financial advisor comes in. Guys, financial advisors study policy wordings and study policy contracts. So when a poor little claims clerk contacts a financial advisor and says, we are going to repudiate the claim because of this and this, your financial advisor will take up the fight because they know the insurance contract. They understand what can be paid. They have years of experience, so they know in what circumstances things will be paid and will not be paid. No. So making use of a financial advisor eases the claims process. It makes it so much easier for you. You do not have to argue with claims clerks or with insurance companies. You give the information to your financial advisor, and they will handle it on your behalf.
Also, what people need to remember is where loyalties lie. Your financial advisor, the independent financial advisor, he works for you because the money he gets paid for his services comes from you, not the insurance company. The insurance company might make the EFT into his bank account, but it's you paying him his income. Therefore, his loyalty is to you. When you talk to somebody at a direct insurer, the direct insurer pays that person. So his loyalty is with the insurance company. So he's going to try and benefit the insurance company as much as possible.
Unfortunately, that's the reality of the situation. So let's say you've exhausted all avenues. Your financial advisor has argued on your behalf. The claim has been repudiated. According to yourself and your financial advisor, this claim should have been paid. The insurance company is in the wrong. The first port of call would be the OMBIT for short-term insurance. If you Google that phrase, OMBIT for short-term insurance, you will get the various contact details. You will then submit the particulars of the claim to the OMBIT, and they will investigate. One of two things could then happen. The OMBIT could make a determination or a ruling compelling the insurance company to pay your claim. How the law works and how it's structured is that insurance companies will accept or must accept the ruling of the OMBIT as a full and final ruling. They must abide by it. If the OMBIT finds that, listen, no, the insurance company was fair to repudiate this, you as a client you are not compelled to accept this ruling.
Okay.
You can still go to court. Whether you will be successful is debatable, because the OMBIT serves as a legislative body, so the court would look at that. But again, there's nothing stopping you.
Yes.
But understand, guys, going to court with an insurance company is a long, protracted battle. It's going to cost you thousands of rands.
Yeah, is it worth throwing good money after bad money?
Especially after the OMBIT has determined.
Yeah.
And the ombud is the epitome of a neutral person. The ombud is not employed by the insurance company. The ombud is not employed by you. The ombud does not charge any money for either party. So they will make a determination based on the facts. Last thing to understand about the ombud is it's a process. They literally get thousands of complaints every day. Do not think I'm going to go to the ombud and tomorrow or the next week I'm going to have my claim paid. It is a process. Also, if you go to the ombud for a small little niggly thing, you're just clogging up the system.
Yeah.
That does not mean do not approach if you feel you've been wronged. Just make certain that the approach is worthwhile.
Yeah.
Because you are still going to have to spend some time corresponding with the ombud, corresponding with various people in order to get your claim settled.
Yeah. So if you have an extra, a voluntary excess or additional excess of R1,000, now you start fighting with the ombud. It takes you 48 hours of work to get that done. It costs you much more than the R1,000 that you paid for that additional excess.
That said, Lawrence, most of the times when a claim is repudiated, it's because of two major reasons. Number one, it's not an insured event. So your vehicle is covered for third party only, it's covered for third party fire and theft, you claim for own damages. And now the claim is repudiated.
Yes.
You are not covered for that insured event. Oh, but I did not understand it is a favorite phrase.
Yes.
Guys, not understanding is not an excuse, especially in this age where you have information available. And the insurance company will have recordings of somebody telling you, remember, you are not covered for this. And that kind of nullifies the whole situation. Going to the ombud for something like that, they are also going to find with the insurance company that you were not covered for. So the number one cause of repudiations is it's not an insured event. The thing you thought you were covered for, you are not covered for.
Yeah.
The second reason is non-disclosure, and we've spoken about it so many times. Rather give too much information than giving too little, because the information you give to the insurance company, which is being voice recorded, forms part of the contract, the agreement between you and the insurance company.
Yes. Okay, guys, that is our time. It's already 11 o'clock. That was a great show. Yopi, thank you for coming on again. Next week, we will be chatting about all the other generalities, other covers like liability cover and Sasria and those kind of things. So don't miss next week's show. And again, if you have any questions, you are welcome to pose them to us and Yopi will answer them. Guys, have a great week. It was good to chat with all of you again, and I look forward to seeing or chatting with you again next week, Thursday, same time, same place. Have a great weekend. Cheers, everyone. Hi guys, Lawrence here. Thanks for watching this video. I hope you found it informative and you got some benefit out of it. Please add in the comments any questions you might have or any other topics that you would like me to talk about. Please subscribe to our channel, hit the bell button so that you can get notified of any new videos that we post so you don't miss anything. Thanks guys, see you around.